Good day, ladies and gentlemen. Today I want to teach you a strategy that gives you extra confirmation before you enter a trade. So if you're a conservative trader, this strategy is best for you. Okay, so no more fake moves. You know, sometimes you have a trade idea, but after you enter the trade, it happens to be that the market doesn't want to move in that direction. Okay, so this will help you avoid all those kind of moves and save your capital. Alright, so let's get right into it. You know, most times when you see a fair value gap, you expect that, okay, it's going to bounce price in the opposite direction. But sometimes you enter the trade and, you know, market just goes past the fair value gap as if it's not there. Instead, it now turns it into an inverse fair value gap. An inverse fair value gap is a fair value gap that is disrespected, and then price retests it and moves in the other direction. For example, as you can see right here, this is a fair value gap right here. Okay, so this gap is what we call a fair value gap. As the wick of this candle, the wick of this candle does not intersect with the wick of this candle, so leaving us with a gap in between, which price is coming into right now. Okay, which price is tapping into right now. So generally, the general idea is that price is going to shoot up from here, but sometimes it could just break on past the fair value gap. It could go past it and then come here to retest and move in the downwards direction. So what are you going to do? How are we going to find extra confirmation? That is what this particular strategy is about, and it has to do with the use of two time frames. I'm going to give you the time frames. The first one is the H1 time frame, which I'm currently on. Then the second one is the 5M time frame. So a combination of these two time frames will help you avoid fake moves. So you will always get extra confirmation before you enter your trade. So how do we use it? You start with the H1 time frame. I'm currently on the H1 time frame, as you can see up here. On Euro USD, I'm on the H1 time frame. You mark out your fair value gap on the H1 time frame. Okay, so you mark out your fair value gap on the H1 time frame like this. Okay, then you wait for price to come back to that fair value gap. Once price gets there, you are not to enter a trade right here and say, oh, price has gotten to the fair value gap, I don't want to miss out, so I'll enter a trade, place my SL a few pips below the fair value gap in order to move in the upwards direction. No, that would have been the normal way to do it, but we are trying to be more careful this time to avoid fake moves. So what you do is you step down to the 5 minutes time frame. Once you see the price has tapped into your fair value gap, you step to the 5 minutes time frame. Now on the 5 minutes time frame, what you're going to do is you have to wait for a change of character. So if this market really wants to go up, it needs to show some kind of change of character around here, whereby structure will be broken to the upside, leaving behind another small fair value gap or an order block. So the fair value gap or order block it leaves behind is what we're going to enter on, you know, to move in the upwards direction. So that's the extra confluence that we are going to use. Draw your FVG on the higher time frame. You can use H4 and 15 minutes or H1 and 5 minutes. You drop down to your lower time frame to take your entry, but you don't just jump in. Like I said, you do what? You wait for change of character on your smaller time frame, which is extra confirmation. Then you enter on the FVG left behind on your smaller time frame, or the order block left behind on your smaller time frame. As you can see, this is current price, you know, it's playing out right now, so the example won't be perfectly clear if I'm just showing you what is happening. The change of character has not happened yet, so I won't be able to show you from this particular current data. Okay, current price. So what I'll do is I've marked out an example, you know, of this particular system when it's played out, just the H1 and M5, but it's not going to be this current price action that you see here. Okay, if I want to wait for some time, this will also play out, showing us the strategy. But let me just give you what has already played out, so you get a full grasp of what I'm talking about. So let's go to the H1. Okay, so let me move this. Alright, so right here we have an FVG on the H1 time frame, as you can see, the wick of this red candle does not intersect with the wick of this blue candle, leaving an FVG in between. So let me draw the FVG with the horizontal line. Okay, so this is our FVG right here. This space in between is our FVG. Okay, so right now you can see what happened. Price tapped into the FVG with this red candle right here. So once price is tapping into it, what do? Let me get a vertical line so that I can know what I'm dealing with, where I'm going to start searching from on the lower time frame. Okay, so let's go to M5. Okay, let me zoom out. Yeah, this is it. Okay, so on the M5 time frame, this is the FVG, the same FVG I marked on the higher time frame. Okay, so what do you see happening? You can see when price tapped into this, you are not going to enter immediately. No, we're going to wait for some form of where am I? This M15. Sorry, let me go to M5. This M15. I'm sorry for that error. That's M15. I need M5. You can use M15 if your higher time frame FVG is H4, is on H4, but we're using H1, so H1 goes together with M5. Okay, so this is the FVG right here. Okay, the H1 FVG. So all we need to do when it got to this point, we are not entering immediately. Okay, we need some form of change of character, which it showed us here. You can see that structure was broken to the upside. Okay, showing us that yes, market really wants to go in the upward direction. So it didn't really leave an FVG behind. What it left behind is an order block. Okay, let me copy. I need horizontal lines which I will use to depict the order block. Look at the order block, this last red candle right here before this bullish move that broke structure. So I'll just place an horizontal line on that order block to form the order block. Okay, so you can see the order block right here. I'll wait for price to retrace back into this order block, then I'll confidently take my buy trade, placing my stop loss below the order block. Okay, so you can see exactly what happened. Price came back into the order block. Okay, came back into the order block and then gave us a nice buy trade. So this is like getting extra confirmation before you enter your trade. All right, so if you got any value, please subscribe and turn on the notification bell. I'll see you in the next video. Thanks for watching.